Welcome to Commodity Analysis. It's Monday the 16th of May, holiday in many places, bank holiday in many places. I just want to do a very quick recap today because the market's very thin and I guess we're going to pick up tomorrow after Friday's rather momentous move on the back of non-farm payrolls. Let's have a look at this one here. This is the gap fork, and this is critical, even though we're not dealing with it directly. But I just want to. I've already shown you that. Look at that beautiful head and shoulders, which was back in February. But look at the support that this right along here. Look right along that centre line. In fact, I'm not too ashamed about that either. Look at that. A nice touch on the upper median line parallel. Another touch. That was a long entry for us and the subscribers. That was another. Then we dipped below. We popped off this maroon, or God knows what colour that is, pink sort of colour line there. And here's Friday's leg up. Now, remember that black line, okay? Because we have, again, resistance all along it here. Now we're above it. If we do retrace some of this move, of this move and this leg up, this is the point 618 retracement, bang on that little area there, just around 1600, and we will come back to 1600. There is no doubt about it. At some point we will retrace. That is the point 618 fib retracement. It's also the point 382 just of this big bar Friday's move. Okay, so it's a little fib cluster, or whatever you want to call it. And there's good support there offered by this whatever that colour is, and this beautiful black that's done its job, earned its money. And we are aiming for, if you see on the blog, we are aiming for this blue centre line, right? And I thought we might get there on Friday, but I guess that's asking a bit too much. So let's draw your attention to these big boys here. These are the mirror lines, or what do you call them? Reaction lines, I call them. You call them warning lines, perhaps. Of these three, and you can see 1, 2, 3, and there they are, 1, 2, 3. So let's drop down because that looks like a bit of a bird's nest. And there they are, 1, 2, 3. And they're not the only structure that's been. I mean, we don't want to draw everything in, but the most important thing is what is the supporting reaction line, and there it is. In fact, there's a band of them, 2 of them. There they are. Let's just go over this one here, just so we, there we go. And let's have a look at the frequency. If we go right down, see the correlation with price. You know, I mean, look, this morning I was watching a very thin Euro session, and we were bouncing along the bottom of this in a little channel. There we are. Then we had this late morning, this little tip down, a touch here. In fact, there's a median line there, and then we failed on this on the opening of the US. And I just want to show you this. And a lot of people dismiss these sort of 5-minute forks, but this is what we were looking at, bang on the opening. And look at that, right? A non-touch down here, okay? I'm in two minds now. Are we going higher? Are we going? Look, here's Friday's high. Let's pop that up there. And what do we have? A perfect touch. What I call a tip and run. Literally, it's a kiss and then off upwards. Whether we come back and retrace, I don't know. All I do know is if we draw this fork here, or in fact I've already done it. Look, there we are. This one here. Waggle it around. See this? And let's just tidy that up because there we go on the first high. Okay, this pivot here, because we want to avoid using this move. We want to avoid using anything from down here because this just distorts price. So we're using all this consolidation, all these bars and actions since. And there we are. Look, we tipped off this line here. That was the one I just drew, if you remember. You can see this move bar by bar. And look, I mean, for example, and remember these commodity lines. If we refresh, it should go back. There you go, and you can see a little bit of support on this line. Up we go. Again, where we're going now. This is in play. Let's have a look in the 15-minute because you need to use more than one time frame to find out where the actual lines lie. It looks like we may fail to make a higher high here. It means the week's all open. I am expecting a retracement, I'm expecting, and I want to be part of getting up to this 1622, 1623. However, I suspect, we'll have a retracement at some point. Whether we move higher to this area here, 1623, 1625, and then down, no one knows. But we want to be watching, we want to be waiting. Let's have a look at another quickly, and this is quite detailed. That's the 1 minute I've been following this afternoon. And again, because of the distortion of the move there, you can see, I've just gone over some of these. You can see some of these, let's get rid of these manual drawn lines, which I use to, let's just remove that. And just refresh up, because we're a bit, pops back into place. And there you can see this upper median line parallel of this mauve fork. There we go. And there's a confluence of an F and L reaction line there. And now you can see we have actually failed. Prices dip down. This is the, and again, that's my manual, that little dotted one. Let's get rid of that and let's draw a. You can see here, this line here is reaction line from fork number 6. So that's a classic. There you go. There we have a new trend down, and this is lower high. Bang on that line. So there you are. If we can just squeeze it, you see it's almost like a mini head and shoulders forming there. But it's full of gaps from my broker. But look, this is going to have to be revisited. But I do expect now, because this fork, and I was drawing a minute ago, is a fail, and since we're not going to get to that, it looks highly unlikely, as if we have us and the energy to get to that. May move lower. Anyway, bank holiday for all. We'll be back tomorrow with a proper free S&P reaction line, median line appraisal. Bye now.